The RoboVin. The RoboVin is, we're going to make this, and it's going to look like that. Now, can you imagine going down the streets and you see this coming towards you? That'd be sick.
Welcome back to Sora Trades. Today we're diving into Tesla stock after a crazy session on Friday, where the stock dropped more than $20 after the Wii robot event. We'll break down Tesla's key support and resistance levels, explore what's next after Tesla's mini crash, and, yes, I'll also point out some bullish reasons for optimism going forward. Tesla has been through some rough patches before and always manages to bounce back. In fact, even after this recent 10% crash, the stock is still holding above the 61.8% Fibonacci retracement level, which often attracts big money buyers. So, there's still a lot of bullish potential here. Let the bears say what they will, but after adjusting for both the 5-for-1 split in 2020 and the 3-for-1 split in 2022, Tesla's stock has skyrocketed by an astounding 21,959%. Let's start with a look at the recent price action. Tesla has been under significant selling pressure, falling from highs near 275 to a close just above 217. This slide was intensified by the disappointing RoboTaxi event, leading to a sell the news reaction. Now, let's talk about the key levels that could give bulls hope. Tesla is still holding above the 216.49 Fibonacci level, and that's no small feat. If it can maintain this level, there's a solid chance we could see a bounce towards 225 and maybe even a retest of 230. As long as Tesla does not close below 209.90, I think we're good to go for upside. But if we see a close below 209.90, that's going to increase the odds of a potential double top with the neckline around 180. And if it closes below that 157.92 is the price objective, I don't see that happening. But we have to be open to the possibility of the downtrend continuing like it has been since 2021. Now, I don't see that happening. Just want to be aware of a potential double top pattern that might be hidden in all of these candles. Plus, let's not forget that the MACD is still above the zero line, which is a bullish signal. And with RSI nearing oversold levels, the stars could be aligning for a relief rally. So while things look a little rough right now, Tesla has shown time and time again that it can recover. Tesla is now trading below its 20, and 50-day moving averages of 239 and 225 respectively. However, one positive to note is that the stock did manage to close above the 61.8% Fibonacci retracement level, right around 216. This level has historically attracted buyers, so it's worth watching closely. We'll get right back to Tesla in a second. I just wanted to bring up the kick-ass trade we fucking crushed in the Discord this week. 100% in 2 days on the 190 calls that don't expire until next week, so I was pretty stoked about that. I like options that don't expire for 2 or 3 weeks. For one, takes the pressure off, and for two, it opens the door to make some serious gains, 5 to 10 baggers. You guys have to join us. We're banging out 500% gains every week, and if you don't think it's worth $5 a day, I don't know what to say. Anyways, now, let's break down some key technical levels. Tesla's 216 remains a crucial support level. This is the 61.8% Fibonacci retracement, and the stock's ability to hold above this level is a positive sign. But if Tesla fails to maintain this, the next critical support level is at the 200-day moving average near 202, which aligns with the 0.786 Fibonacci retracement. Tesla is at a critical point, and both bulls and bears have reasons to be watching closely. But with strong support levels in play, there's still hope for a bounce. Let us know in the comments. Are you buying this dip or waiting for more downside? On the upside, resistance comes in at 225, which is the 50-day moving average. A close above this would signal some bullish momentum returning. Turning to the technical indicators, the picture is mixed. The MACD is still above the zero line, suggesting the longer-term trend remains positive for now. However, the MACD line has crossed below the signal line, indicating that momentum is weakening. At the same time, RSI is hovering around 35, close to oversold territory, suggesting we might see a relief bounce. But we can't ignore the fact that recent high-volume selling could weigh on any bullish attempts. What we really need to see right now is a high-volume recovery. Tesla holding above the 216 Fibonacci level is a key short-term bullish signal. If this level holds, we could see a bounce back towards 225 and potentially beyond. A stop just below 215 would be a good way to manage risk. If Tesla breaks below 216.49, watch for a move towards the 200 level, which aligns with both the 200-day moving average and the 0.786 Fibonacci retracement. A short position could be considered here, with a stop above 220 to guard against a false breakdown. Tesla's stock is at a crossroads right now, with key levels and indicators pointing in different directions. Whether you're bullish or bearish, having a clear plan is essential. Drop a comment below. Are you buying this dip or waiting for a deeper correction? If you enjoyed this analysis and want to stay updated on Tesla and other stocks, annihilate that like button for me and please subscribe to the channel for more in-depth market analysis. Thanks for watching and see you in the next video.